Important breaking news this morning. China is striking back. In just the last hour, Beijing announced it is now slapping new retaliatory tariffs on all U.S. goods by an additional 50%, bringing the total tax on U.S. goods headed there to now 84%. Just look at your screen. That is after President Trump followed through on his threat to hit China with new tariffs, adding up to a combined 104%. That set in at midnight. So as the two countries now show exactly what a trade war looks like, going punch for punch, here's a live look at how stock futures are looking, and they are down across the board. They were mixed early this morning. Now all the major indices are down. Let's continue to follow this morning. Opening bell next hour. Investors bracing for another roller coaster ride today. Many of the markets in Asia also took a hit as the new round of Trump tariffs set in. And also this just in, we have first reaction now from the White House, which we will get to in just a moment. CNN anchor and business correspondent Zain Asher has the very latest for us, and she's joining us right now. So with this response from China, one thing, and all the things that are not clear, one thing is clear, is China's taking a very different approach than basically every other nation.
Absolutely. I mean, say what you want about reciprocal tariffs that are taking place across the world right now. The canary in the coal mine, Kate, is China, not just because of the 104%. Obviously, that is a huge amount, but it's also the fact that American businesses have had such little time to prepare. This is moving very, very quickly.
Yes.
You think about the retaliatory tariffs, 104% in terms of what Trump is slapping China with, 84% in terms of what's happening vice versa. Xi Jinping, his rationale is, listen, we can afford to wait this out. Why can we afford to wait this out? Because Americans rely on China much more than vice versa. It is the American consumers that are going to suffer because America imports essentially 3 to 4 times the amounts of goods from China compared to vice versa. Also, the Chinese have other ways of protecting their economy, including, for example, boosting domestic consumption. That's one way. Also strengthening regional cooperation. That's another way. There is a fear that they're going to flood the EU with more Chinese goods. That's another factor as well. But they know that it is the American consumer that is going to suffer, and they are hoping that that will force Donald Trump to the negotiation table here.
And I was talking to Mark Stewart. One of the things that he was saying is look at the timing of when China also announced this retaliation. That goes kind of a pattern that people have noted with China right before kind of U.S. markets would be opening. Right. One could lean on thinking that that is intentional in trying to see, make the hurt as much as possible, or be as volatile as possible. But that's not just the only thing we're looking at today. We've got reaction coming at some point soon from the EU as well. They're voting today on how are they likely to respond?
I mean, yes, so they're voting today. And what's interesting is that in terms of their retaliation, they are responding at this point to the steel and aluminum, or aluminum as the Americans say.
I love you.
Aluminum. I still need to get used to that word. Aluminum tariffs that were imposed back in March. So they're literally 2 sets of tariffs behind. They still need to respond to auto tariffs. They still need to respond on the latest 20% in terms of reciprocal tariffs. Part of the reason why the EU is so slow is that we're talking about a 27-member bloc. So of course they're going to take their time. Also, I think what's really important is that they have to be smart. They have to be strategic about how they respond so that it doesn't come back to bite them. They really need to sort of play out the game of chess. So for example, Donald Trump had initially threatened them with 200% tariffs on EU alcohol if they went ahead and imposed tariffs on American bourbon.
That's right.
So they are deciding today, and it is likely that they're not going to include American bourbon for that reason. That would have completely destroyed French winemakers, Italian winemakers, Spanish. I mean, it literally would have been game over for them.
And putting it that way is interesting because it does add into a bit of, call it chess, or just, there's a little bit of as the Wall Street Journal editorial board had written it, just call Trump's bluff, right? You had the head of the European Commission saying, we propose 0 for 0 tariffs. Right. He said no. Now they will have a carve out for Kentucky bourbon. So what does that mean in terms of how Trump responds? I guess it is a very dangerous, very impactful game of chess.
Very dangerous. The EU is also taking it slow because they really need to sort of leave some room open here for negotiations. You pointed out the auto tariffs. They're trying to see if that can be 0%. But EU, if we could pull up actually where EU markets are right now, they were, I mean, obviously the EU, Europe as a whole is 5 to 6 hours ahead of the US.
Correct.
So they're going to be closing soon, but you see they're down significantly across the board. The FTSE 100, CAC Caron, all of them are down right now. So in terms of optimism, there really isn't much in the way of that.
Not today, not right now. Zane, it's good to see you.
Good to see
Thanks
you,
for
my dear.
coming in.
Of course.
John?
All right, and with us now, CNN global economic analyst Rana Foroohar. So, Rana, since we've been on the air in real time, China announced its retaliatory tariffs, putting its tariffs on U.S. goods at 84%. U.S. tariffs at Chinese goods are 104%. So where does that leave us as this trade war progresses this morning?
Well, it leaves us in chaos, is the short answer, and you can see that in the markets already. In terms of the real world impact, it's going to take time for this to play out. And the way it's going to happen is you're going to see supply chains beginning to rejigger like dominoes falling. If you think about how many parts are imported, say, for the average car, I mean, it's hundreds, it could be thousands for some pieces of equipment. And as those pieces get imported, the retailers are going to have to decide who's going to pick up the costs. Are they going to try and push it on to suppliers? Are they going to take some of the pain themselves? Are they going to pass it on to consumers? And so, in different products, in different industries, in different parts of our lives, we're going to begin to see prices shift. It's interesting. You can see a lot of Americans actually responding to the threat of this by shopping, which,
Right.
it would seem like an oxymoron, but actually it sort of makes sense. People are stocking up. They're thinking, let me go ahead and buy all those toothbrushes. Let me maybe make that car purchase. You're even seeing, certain retailers, automakers are not actually sending as many cars out for export. They're kind of hoarding supplies. So we're beginning to see the sorts of things you see at the beginning of a trade war, which is disruption to the status quo.
So stock futures did not react well to this Chinese announcement. They dropped about 1% the minute that China did announce the retaliation. And if the markets close today, and it's not clear that they will, that's not how futures work, but if they close, the S&P down more than a point at the end of the day, that would put us in a bear market, technically. That's stocks. But Rana, what I've heard overnight is more concerns about the bond market. The bond prices are dropping. I was excited to talk to you because I know you can explain in ways that silly people like me can understand why that's important and so concerning.
Well, first of all, I just want to say to all listeners, the simple questions are always the best questions. It's an interesting thing. Usually, when you see a kind of a stock market rout like what we're seeing now, you would see safety assets, things that people feel are more secure, like bonds, particularly short-term bonds, short-term U.S. Treasuries, gold, even. Things like that should be rising, but actually in recent days they've been falling. So why is that? Two things to think about. One is that a lot of players in the market, particularly big institutional players, hedge funds, the professional guys, are actually selling the good stuff, meaning, the safe bonds, the gold, in order to cover the losses that they're having in other places in their portfolio. That's something that worries me because that's the type of behavior that you see when there are more losses to come. It means there's blood on the floor somewhere. There are big places where there's debt that may be covered and we don't know where it is. And that just means that there's a lot of risk in the market still. Point number one. Point number two is that even before this trade war, the bond market was telling us, we're nervous about the US economy. We're nervous about the world. We know that there's a kind of a paradigm shift coming, and they were reflecting that. Yields were going up, which means you get paid more for taking the risk, but prices were going down. And that says the bond market was already thinking, even before the trade war, gosh, I'm worried about the US economy.
Yeah, it's a scary cocktail, the likes of which you see during COVID
Yeah,
or something. I mean, we haven't seen something like we're seeing
exactly.
overnight since COVID, which is why I think people are waking up going, whoa, this is getting even more tenuous. Again, back to the first question, you were talking about goods. Rana, do you have a sense of where people will see this first? I'm going to go to the store and the price for this is what's going to be higher most quickly.
Yeah, for sure. You'll see it first in perishables, in food and agricultural products, things that would need to be imported on kind of a day by day basis, and then you would see the price hit quickly. The things that will take longer will be, complex products, things like cars, things like certain kinds of white goods, computer products, where the retailers and the manufacturers might have a lot of parts that are already in stock. And so it could take weeks or
Mhm.
months for them to need to import more. And then you'll see those prices begin to rise. And by the way, to try and find a little bit of a silver lining here, there is a lot of rejiggering of supply chains that is going on even as we speak. So, automakers, computer parts makers, they're all looking around the world and trying to figure out, okay, where are tariffs the lowest and how quickly can we get our products there? In a way, it's going to be a really interesting real-time experiment in how quickly can we rejigger global supply chains in an emergency. Kind of
There are,
COVID-like again,
yeah,
as you were saying earlier.
there are a lot of real-time experiments going on right now. Maybe more, I think, than people.
I wish there were fewer.
Right. I mean, people are struggling right now with the amount of real-life, real-time experiments. Rana Fruhar, great to see you this morning. Thank you for explaining everything so clearly.